there's another issue, and this is what I've been thinking about all weekend long, and there's the health issue that we're all dealing with, right? That's an important issue, but we don't all work isn't always, it's not all financial. There's two other issues. One, work isn't financial. I mean, work is financial, but it's not just financial.
Mm-hmm.
We are suffering. There's suicide spiked up, abuse, what is it?
Marital
abuse, child abuse is going up. You look at a lot of these ERs, they're getting kids come in that are being raped because you have a monster at home who can't leave. And it's just, so there's that function. And there's also this other issue with no longer we're not out, hitting other bacterias and viruses and issues, the more our immunity is suffering. Like
that's interesting.
The way we build our immunity is by being among this stuff.
There is, like, with the whole thing with coronavirus, though, there is no concrete research that says that you will be immune once you get it. Right. And I think, like, all that stuff, like, because I think it's awful, and I'm like, I know I'm definitely feeling it mentally, and I really just want them to just ease it up just a little bit,
Right.
And I think it's also, it's really horrible what's going on, but I think it's really bringing to light that the lack of social services that we have for these people who suffer with this.
That's fair. That's more than fair.
I think the difference between this and flu is that so many people who have this are asymptomatic. And as a result of that, it's an unknowable. And for the people who do get it, for that small percentage, it's lethal or pretty close to lethal.
But it's a small percentage of a specific category, and that's that. And I read.
It's not okay. So there's a front page story in the Times today about a 49-year-old lawyer in Boston who went hiking in the White Mountains and came down with this. This guy was in great condition.
Yep.
And
so hold on. I those stories are out there, but those are
exception, not the norm.
Yeah. So most people that are in their 20s and 30s and 40s that get this, if you can write a story about them because of how bad it was in the New York Times, that's an anecdote. The statistics don't support that how bad that is. They just don't.
I don't know. I just, like, because of, like, who it affects, like, I know so many people who have, like, immune compromised systems, and I just worry about, like, my father and my mother.
And that's why they say, though, that the people that, the difference today is we're actually quarantining everyone, whereas historically you have someone that's ill, you quarantine them. And the challenge here is there's that 5-day window where we don't know if you're ill. And so that's why we've shut it down for everybody.
Well, they talk about that too in this documentary. They talk about why that is, because, like, when we had, like, Ebola or H1N1, it, like, you can quarantine that person really fast because it showed itself. Like you said, it shows itself, and you're basically, if you get it, you die.
Right.
But I don't know. I highly suggest this. It's super informative.
Will you put it in the chat so that the folks that are the attendees?
Oh, in here? Yeah.
In the chat. So we're actually live. We've been recording. We do have some folks here.
Hi.
Just a few. So hello. I'll say G, J, and J. There's a few folks here. And as per usual, there's a Q&A button. And we're gonna look at the Q&A button for questions. Sara actually just copied into the chat. And Sara, is there a way to tell that, does everyone have access to the chat? Do I control that? Do I have to set it up or give people access?
I think they should have access unless you have disabled chat, but I don't think we disabled chat on here.
Yeah, so you guys have the ability to write something in the chat box that we will see, but right now there's an item in the chat box that's to everyone here that is something that Sara saw that she liked as a it was on Netflix. It was kind of a what'd you call it, Sara? What was the name of the show?
So it's show called Explained, and this they're doing a series on the coronavirus about how it developed and how it compares to other pandemics that we've had in the past. So I found it very reassuring.
Okay, cool. So that's something to go to for more of the medical data and information. I wanted to kind of pivot a little bit some of the conversation to the big conversation we're having now publicly, and I think we're going to have this a lot more publicly, and that's opening back up again. What does it mean to open back up again? What's the up, down, in, out? What do we have to think about? What do we have to worry about? Those kinds of things. And the way I thought I'd start talking about it was, I don't know if I broke my ankle seven years ago. I don't know, 8 years ago, 6 years ago, a while ago. And I remember that when I broke my ankle, I had to have surgery, I had to have plates and pins, and I had to have a cast, and all those things had to happen to repair the bone and the tendons and the ligaments around the ankle itself. But then I was in a cast for months and a boot after that. And so the thing that happened as a result of the break was the muscles of the leg atrophied. And so getting back, if I was in the boot for 6 months, my recovery, my ability to be strong again with the ankle and with the leg would have been much more difficult than it was, because I was only in that boot and that cast for like a 2-month period. So that's kind of precisely what we're going through right now in this conversation about opening it up. And I think we have to be really careful, because I'm on Facebook way more than I should be, and there's a lot of shaming out there about, how could you possibly talk about opening up, and this is crazy. We're not trying to protect rich people's money, and I just want to be really clear. This isn't, opening up the economy isn't about protecting rich people's money. The people that suffer in any kind of downturn aren't rich people, right? It's everyone else. And inequality is being totally exacerbated by this. The issues that we care about, that we're concerned about, are being really blown up because of this. And so we just have to be really thoughtful about what people are saying. And I'm reading it, and maybe I'm having a response and no one else is seeing these things. But I have some friends that are I have one friend that I've listened to for a long time, that last night was the first time I was like, all right, I didn't unfriend him, I just unfollowed. So I'm not going to see the stuff he posts anymore, because I can't deal with it. So right now the question is, and I think this is really a really important question, is the longer we wait, we don't know. We don't know the damage, how bad it will be, or how hard it will be for the economy to restart, no matter if we wait another week or another 2 months. We don't really know. We've never done this before, started from scratch, right? This is one of those moments of being unprecedented. And we actually don't know. We know that we've flattened the curve, but we don't know that if by doing it this way, we've made all these people stay at home and have fewer, interactions with other bacteria and other viruses, and have other issues being at home, and the depression that's being involved, and people's self-worth is being questioned because they're at home and they can't work, and there's people that were unemployed going into this, that have been unable to that can't find jobs, and they are questioning their own personal value the longer we keep this thing closed. There's other issues, and we know the short-term benefits of keeping it closed. We know the short-term benefits. We have fewer diseases, fewer illnesses, fewer people get sick. We don't know the long-term benefits. And we know that there are short-term costs. We don't know the long-term costs. And so we should have a very open conversation about this kind of stuff. And I don't know the answers to these things. But what I don't want to have happen is, I don't want to have people, basically just yelling at each other about, and just shaming each other about, you shouldn't be doing this, or you shouldn't be doing this, or why are you arguing for that? There's a lot of really good arguments about this. And I spent the weekend reading about what is the meaning of work? Like, is it just a paycheck? And turns out it's not just a paycheck. There's all kinds of other benefits that come from work that people aren't getting right now, and people need. Just being social, a sense of value, a sense of purpose. It's very difficult, and for me included, being at home, sitting in the same chair every day, not moving around a lot. It's definitely having an impact on me personally. So I know it's there, and that's kind of, I want to begin the conversation with that, and I want to see if Scott or David or John will have anything to add on that, the open it up versus keep it closed conversation. And there isn't there's no answers here. So if someone has something to say, I'd love to hear what you say about it.
Well, I can talk about my wife, the real estate agent, Sherry, who, number one, hates working from home. She loves being in the office. She loves being around other agents. And this really had an impact on her. So she was keeping herself busy by doing Instagram. She's got a social media coach. Just been on a million Zoom meetings. Has clients that want to sell their house. She's moving them into June, into July. And then she's got people in her back pocket that want to buy. And then she was getting worried about her own. I mean, she's very busy. And now that she's not busy, it's like, can I ever do this again? Will I ever sell a house again? And fortunately, they relaxed the rules some bit. And she did go into contract with a client, believe it or not, last week during this whole lockdown, shelter in place. And it was just a fantastic kind of like release, whatever you want to call it, for her to, like be back in the saddle again, so to speak. But yeah, I mean, I just watched, for me, I'm coming to the office every day, and I'm here earlier than ever, just so that I'm not in her hair at home. So for me, this whole thing, it's been, going to the office every day, which is fine by me, just to give her a lot of breathing room. Anyway.
Thanks, John. That's good. Again, it's anecdotal, but I think it's something that we're all going through. I think, was last week the 7th week, or is this the 7th week? I've lost track of time.
I do know that this is day 42.
Yeah. Okay. Scott, you have anything to add there?
I think what's really interesting is there is a real pent-up demand in the human experience that people really want to go and do stuff. And I can speak, like my wife and I had realized we weren't moving enough weeks ago and still not moving enough. So we started walking around the neighborhood and we actually got really tired of seeing the same things, to be honest. So over the weekend, we actually got in the car with our masks and our gear and drove over the Bay Bridge for the first time in several weeks. And we decided to walk around Point Richmond on the water in a completely different neighborhood with people we didn't know and possibly a place we want to purchase next year. And it was actually really nice to just get out and not see the same old things, whether it's my kitchen or like the same neighborhood over and over and over again. And we ended up going to Southie, which is on College in Berkeley, Berkeley or Oakland, and did takeout because that was one of my favorite places to go with David Glotzer for lunch. And I was really happy to see that the guy that was there, who's our waiter and server all the time, he said he's actually working more now than he was when they were open because I guess Wood Tavern and them are kind of like doing things together. And it just sort of gave me a little bit of a sense of normalcy. I literally haven't been in Berkeley or the East Bay in weeks. And so I just think there's a lot of people that feel the same way, like they just want to get back to some sense of normalcy. And it's just hard to determine when the right way to do this is. I think the smarter politicians, without being political, are going to do a little wait and see. Some of these other maybe aggressive politicians throughout the country want to go open right away, and they've already been doing it. And so I think they're going to wait and see if there are these spikes, and putting their citizens and their constituents at risk. But I'm hoping we can in the next 30, 60, 90 days really start feeling a little bit more normal. And I'm not a scientist, I'm not Fauci, but it feels like that's what's coming. And that's the good news, right? Because a month ago we didn't have any vision like that at all. And I think we're getting there, which is good and positive.
So everyone here, all attendees and the people that are panelists here know that there's a South Dakota libertarian in me a little bit, and it comes out, and I want to remember that the reason that we went on shelter at home was to protect and build our medical capacity. It wasn't actually to keep people from getting sick. It was to flatten the curve, to protect our current medical capacity, and hopefully build more, which means more ventilators and more masks and more PPE. And I think largely those things are happening. The testing, build testing capacity. That's, I think yesterday, maybe it's 3 days ago, we did 300,000 tests in a day in the country. And then that dropped off to about 150, and it bumped up to about 200. So I think the number that they've been saying is when we're doing 300,000 tests in a day on a regular basis, and we have that capacity to continue doing that for a long period of time, then test and trace can work. Now we still have to all voluntarily agree to test and trace. Like that's the.
Well, it's not only that, Jonathan, because there was an article in the Times over the weekend that they did some tests on antibody tests, and 11 out of 14 were either false positives or weren't accurate. And as a result of that, they have to get antibody tests that are in fact accurate in order to enable us to identify those people who are free to go out and be in the world, basically. Yep.
I think you're talking about the second kind of test. I'm just talking about the test of the people that are, the antibody tests aren't complete yet. They're not reliable yet. But the tests of who has it, like actively, that's better. That's the one you get at 300,000 tests that are working. But yeah, we have to have the antibody test as well. Anyway, so I want to make sure that everyone knows there's a Q&A button, and you can pop a question in there. We do have a few attendees. You should feel free to ask questions. And then to the panelists, I want to remind you that we are recording. So when you're not talking, let's mute ourselves. That way we can actually use this recording later. And if you want to interrupt me, just whatever, wave your hands or something like that, and I'll stop and let you go. So one thing we did this weekend, and we haven't done this, many of you know this, I basically have not left the house. I went for a run last weekend and 2 weekends ago, and I went for a hike with my daughter. I guess there is a labyrinth. I don't know if you guys know this. There's a labyrinth inside Tilden, and it's in Tilden, but you have to kind of leave the regular path to find this labyrinth that was built by the junior rangers, and Annie's a junior ranger, so it was built a few years ago, and she took me backwoods to find this labyrinth. It was actually really, really cool. It was just she and I in a labyrinth. It was very cool, in deep in Tilden. So did not know that was there. She took me for a hike and we found it, which is really neat. But this last weekend, the four of us went down to Tilden behind the Nature Center, and it's a big mowed lawn, and we played Frisbee, and we took a soccer ball down, and we sort of kept our distance. That we were the only ones there in this whole lawn. No one else was there. The guy that did the mowing and was taking care of the animals, the little farm is closed. You can't go see the animals at all. But there's a guy there that's taking care of them, feeding them, making sure their water pens are clean, all those kinds of things. And he was like, well, look at this. You're welcome. I just mowed this for you guys yesterday. Hope you enjoy it. And it was just us. And it was a great little time. We got out there, ran around and kicked a soccer ball and threw a Frisbee, and my kids climbed a redwood. And it was kind of really neat to get outside and not be stuck here so much. We still don't have any questions. It looks like maybe we can curtail some of these kinds of things then. I wonder if I can just wait it out.
Do you want to talk about the market at all?
You mean the short term, the return, what specifically? Oh, I can make. You know what? There's something I can say actually that's really important. So 35 now, maybe 40 days ago, 35 days ago, we did that rebalance. Markets are definitely higher than they were when we did the rebalance. But once you do that rebalance, then that started the clock ticking 31 days before we could actually do another massive round of trading. And so last Friday we did with Paul's help in the office, we did some loss harvesting. And so clients that had equity positions that had more than a $10,000 loss, we captured that loss. And right now we're in the next 31-day period where we will hold those replacement securities. And then 31 days from now, we'll actually trade back into our original models and just capture those losses to be used against future gains. Or if not to be used against future gains, you might be able to use them this year against gains if you're selling a piece of real estate or have something else you're selling. Or clients that are IPOing this year or have an IPO, if that happens by the end of the year, they will be able to use some of these losses to pair against some of those gains. Okay, here's a question that came in. Help with getting questions kicked off and something I'm curious about. There was speculation earlier this year that many tech companies were going to IPO. How will this pandemic impact that? Well, I mean, the best example of this is Airbnb. And Airbnb has been crushed by this because hotels, I think hotel occupancy is down like 98%. That means Airbnb occupancy is also down about that same amount. Huge. People aren't traveling, people aren't staying anywhere for business, they're not going anywhere for pleasure. When that happens, these Airbnb's revenue dries up. All of the Airbnb host revenues dries up. All the hotel revenue dries up. It goes away. So it's unlikely we're going to see Airbnb at least go forward with a public offering at the valuations we had assumed before. They could still go forward with the public offering. I doubt we'll see it by the end of this year unless we see a big resurgence in the Q3 and Q4, unless people really do return to prior behaviors. And then other IPOs may be different. Like we may have security IPOs of companies that are in the security, software security markets and those kinds of things. We may see some of those, but by and large, your IPOs are going to slow down a lot because the economy is slowed down. Anything that's affected by this, anything travel related is going to be much weaker. Banking is going to be weaker. Anything that has to do with finance is going to be weaker. There's actually a lot of those companies that were going to go public may never go public now. This may do enough damage in that space that you'll see some of these companies that just fold. They can't raise the money. Scott, you want to add to that?
Well, I mean, I think Airbnb is a great example because we work with somebody very close at Airbnb, and it was valued on our systems for planning purposes at $126 a share, private valuation. It's now in the 80s. So it's about a 30% trim off the value of the company. But, when you are a strong company with a great business, with tremendous revenues and actually are profitable, which they were, this kind of thing is temporary. They sought and received $1 billion in funding from one consortium and another $1 billion in funding because those consortiums realize they're buying this tremendous enterprise on the cheap and getting access to it. So, I don't long-term have a big problem with Airbnb. I think they're going to be just fine. But like a lot of really high-quality enterprise businesses, they've been priced and discounted down dramatically in the last 30 days, 60 days. But yes, I think Airbnb does go forward. It probably happens at the end of the year or into the beginning of 21, from what I'm hearing. But they did not have a problem raising money at all, and they did not get it from the government. Right. So that's important. That's real important.
So there's another part of that, right? So there's also a whole bunch of companies that were nowhere close to being IPOs, that were all, angel funded, first rounds of financing, VC financing, maybe the second round, maybe they got a C round of financing. And a lot of those, and you've seen this if you've read anything in the media about this, you've seen that a lot of the private equity in the hedge world was locked out of PPP, but their portfolio companies aren't. If they have a company that they've invested in that has employees, they can actually reach out and borrow money on PPP to keep those people employed and keep being active. They're not going to be able to raise another round of funds. One of the things I love doing is just a pastime, is I do some angel investing. So I invest in very tiny companies, very small amounts, like $3,000 in companies. And I do this through somebody that I trust, and I've worked with them for a few years now. And I asked him, I said, so, what's going on with the portfolio companies? He's the one that's recommending these things. And I asked him what's happening. He said, well, the reality is those companies that have really good businesses are going to be fine through this. They're going to be able to raise funds. They're going to be able to make it work. And those companies that were probably going to fail anyways are going to fail more quickly. And you've probably heard me phrase the conversation around restaurants and retail stores that are out there right now suffering in kind of the same phrasing. Because if you have a restaurant that has a 2% profit margin, and that's it, it's not a long-term viable business to begin with. And so this kind of event is going to hurt that business. If you have a retail store that's got a 30% profit margin, then you may survive this. You may be able to pay your rent. You may be able to. So the same is true in angel-funded firms. There are businesses that are going to be successful because they are good business, and there are businesses that will fail. And many of those that are relying on venture capital, they'll just fail more quickly because they won't get that round of capital that they need. But they were just going to use that round of capital as a crutch to last a little bit longer, maybe pivot at some point in the future. And so those people that are involved in those companies, what do? They go on and figure out something else. They start something else and try to get funding for something else. Largely that happens a lot. So the IPOs are going to be slower. A lot of the startup companies are going to fail. Most of the ones that would fail would probably have failed anyways. And I think that's kind of the nature of the creative destruction we have in this system. Another question that came in is anybody reflecting on what advantages are to be found in this experience? If we're lucky, we could end up in a highly limited situation as very old people. What can we have learned? I think it's fantastic, actually. Yeah, and we talked about it a little bit last week. There is a lot of talk about learning lessons through this, and I think that maybe there'll be some lessons that hold through this. And I think that we are incredibly adaptable as humans, and we suffer from pressure from each other. So if you fast forward 3 to 6 months, my friends are going to go to sport. I will not be the first one to do this, but my friends will go to sporting events, and they'll go to concerts, and they'll be saying, oh my God, we had such a good time at this concert. And oh my God, there's such a great, watching the Bears, go Cal Bears, right? It'd be such a good time at the Bears game. And I'll be like, all right, good. Yeah. And I won't go, and I won't go to the concerts, and I won't go to the sporting events. But they'll keep saying how much fun they had. Oh my God, you should have been at the Freight. Oh my God, you should have been this. And eventually I'll be like, okay, I guess I can do this. I'm going to go give it a shot, and I'll give it a shot, and I won't get sick. And so the next weekend I'll be able to do the same thing again, and it'll be easier. Yeah. And that's going to happen across the board to everybody. There's a basic, what is it? There was a technology, maybe it was George Gilder wrote an article like 25 years ago about technology adoption. And he said, there's all these people that right out of the gate are the first ones to adopt a brand new technology. and they try it, they use it, they brag about it, they see how cool it is, and then they tell everyone else how cool it is. And then there's this whole swath of people in the middle that slowly adopt it. Okay, that's cool. I'm gonna try this. I'm gonna do it. I'll do it. Okay, I'll try it. And then there's all these people at the very end. John, as John's here, so John, you're the last person I know to get a cell phone. And so, so you want to comment on the technology adoption, John?
Well, so all my phones were flip phones and hand-me-down from my daughters, and they all upgraded to iPhones, etc. I just didn't have a choice. When the flip phone finally died, I went into AT&T, and I'm like, what do you got? And I don't want to spend a lot of money, kind of like the Meineke muffler ad. You know, I want a new muffler, but I'm not spending a lot of money. And so the guy helped me out. I got, I guess it was several years ago, a thing called an iPhone SE. And then lo and behold, I was on my iPhone SE yesterday and saw a news story that Apple is coming out with a new iPhone SE for only $399. So that piqued my interest. But yeah, I do miss the old flip phone, though. I'll tell you, I was a texting fool with that thing with my thumb, and the iPhone I just don't find as easy to use. But
so my
got to make changes.
Yeah, I think my daughter's is in the queue for one of those new SEs. The rules in our house are you get your technology, you get your phone, after or when you're going to go into 7th grade. And since 6th grade was basically cut short after the first couple months, she's looking forward to that, and we're in queue right now to get the new SE. Evidently, it's more powerful than the 10. I mean, or the X, whatever. So, looking forward to seeing what that's like. Very, very low cost, lots of good features. But I mean, the idea is we forget that there's a process by which humans adapt, and some people adapt really quickly. Some people adapt there in the middle. Some people are the ones that come latest of the crew. That's going to happen. That happened into this statewide and individuals. It's going to happen coming out of this. And that's just kind of how it works. Will there be some permanent lessons? Sure, right? Some things will change. But if Corona didn't happen, there'd be some things that change, right? It's just what we do. And I'm not sure, John, if that answers your question directly, or if you had something else in mind. But if you had something else in mind, go ahead and pop it in there. That'd be great. Yeah, Scott, go ahead.
Yeah, there's a couple things I've read recently too, which I think are really interesting. The first one was, how do we have these concerts and these sporting events and these gatherings? One thing I heard, which was sort of interesting, was you would have to take your temperature before entering, or you'd have to have an ID card that said you were vaccinated for COVID, right? That was one interesting thing in the future. And if you almost think back to, like, flying is very different than it was 20 years ago. We just have to do different things, right? And the other thing I thought was really interesting was Carol Bartz, the former CEO of, I think, Autodesk and Yahoo. I think she's with a cannabis company now, but widely successful in Silicon Valley. She said that they're going to redesign going forward a lot of these companies back, no longer being this open technology, everyone's sitting out in the room, back to cubicles. We'll go back to cubes, which is sort of interesting. It makes kind of a lot of sense to me, but I just think we're going to be innovative, and we're going to do things like this to be safer, more efficient, effective, and adapt to a world that's a little bit different than it was, 6 months ago. Just makes sense.
Interesting about the going back to cubicles, perhaps. We have a client that used to be at Facebook, and he visited us at our old office down there at Shattuck and Rose. And we were saying at that time, we're growing and we are going to probably need to move. And he said, are you kidding me? At Facebook, we'd slam a bunch of desks together. We could fit 50 people in here. Right? Remember that, Jonathan?
Yeah.
Yes, I do. And I said, no, we're getting more space.
Yeah.
You could have had 4 people in your office, John. Sorry, go ahead.
Huh?
I said, you could have had 4 people in your office, John. That would have been a problem.
Well, if they're munchkins, maybe.
Yeah, exactly. Little people. So David, you're on mute, but I got a question for you. You're talking to people. What's the biggest questions you're hearing right now?
Well, obviously, I think people still have a concern about the market. I mean, we're now at a level of about 15% down, which is considerably better than it was, a month ago. On the other hand, I think people are still nervous. And some people I talk to still have an expectation because of this slowdown in the economy that it's going to take longer for the market to recover, or that it may not recover, that we're looking at a potential, more cataclysmic down on the horizon. So I think while many people have kind of settled into this trading area we've been in the last couple of weeks, there are some people who are still quite nervous about what's going to happen. And there are people getting very antsy to be back into some kind of normalcy. As you pointed out, obviously the people who are hit worst by this are the people with less money, because they're in a much more perilous circumstance financially. So I think we're seeing the gamut of occasions. Some of our older clients who are by themselves are more lonely as a result of what's going on. And that, I think, is extremely difficult for people. I'm lucky. I'm in a house with my son and daughter-in-law and 2 grandchildren. So I don't really feel isolated. And I've had a lot of time to read, which for me is terrific. So I've actually enjoyed being in quarantine, which maybe sets me apart from some other people.
Yeah. I'm coming to the end of my rope with it, but I've also enjoyed just having the whole family together and not having to drive kids everywhere. And there's been some positive things from it, but I think we have a big enough house where we can all separate. Like, so Eli's in one room on his computer for his school, and Annie's in a totally separate room, on her computer for her school. I'm working from my computer in my office, and Kate is in a completely other. And so we can get away from each other, but then we're coming back together, and I'm, see him at lunch, see him, and that's kind of nice. But it was really nice for the weekend to go kick a soccer ball with all 3 of them. That was pretty cool. So I just want to touch on the concern about a retracement or an additional down leg in the market. So I think if it happens, we shouldn't be wildly surprised by it. I think that we have at least 2 months of really, really horrific economic data to wade through. I think the economic data is, we just have to look for it and say, we expect this to happen. The data is going to be awful. And it's going to be, numbers like it's going to be numbers that were worse than the Great Recession. So that will give people it'll give folks in the media the ability to say, this is the worst thing since the Great Depression. And that will be an accurate statement as far as the numbers are concerned. But it's a completely different scenario, right? So this isn't a depression. it will be technically a recession, but it's actually a suppression. We shut it off. We took the economy and we turned off the key. And so the longer the key is off, the longer it's sitting like this, the more difficult it will be to spin back up. But there are people right now making plans to spin out new things. There are business plans being put in place. I have, our own business, DO Wealth Management. We are doing things to grow out of this. It's going to be a rough quarter for us as well, but we're taking action to grow out of this. The people I know that are in business, whether they're, and I'm going back and forth with a painting contractor that we all know, who I'm trying to get him engaged in the next 2 months of growth for him. There's a retail business that I talk about a lot here that I know what his plans are. And the businesses I know that are run by people that I know, they're all making efforts to think through, make decisions, and then when we open, they're going to be ready and they're going to grow out of this. There will be many that don't think it through well, that don't have the capital to put to work, that can't reinvest. Arguably, those are the ones that ultimately would have failed anyways. It's the ones that are thoughtful, that have retained some capital, that are going to survive this. And the issue we've talked about here in the past is it doesn't matter which businesses provide the services and the goods. Right? This is not our goal, is to recognize that it is the individuals who are buying the goods and services, the companies that are buying the goods and services, the governments that are buying the goods and services. It is the demand that will be reborn when we all leave our homes. Scott was talking earlier about we want to go to a restaurant together. We're going to want to go to these things together. We're going to want to be out in public. I miss sitting at a restaurant. I miss Indian food. Like I really want to go to a janta. And so I miss that, and I will do that. It'll take me a little bit longer than most. I won't be the vanguard. I will not be the first group of people that goes to a janta or any restaurant. I'm not going to adopt it quickly, but I will adopt it. It will happen. I'll do it probably before I have a vaccine. But it is the demand that will see us resurge out of this. It's the demand that people have, that we have. And there's a bunch of statistics over the weekend that came out. There were people, and I don't know if, hopefully you all know this already, this isn't a surprise, but your phone, the data from your phone and your moving about, everyone knows it. They don't know where you are, but they know that there's these phones that are moving, and they watched phones stop moving up until about 2 weeks ago. No one went anywhere 2 weeks ago, but right after, actually maybe it's 3 weeks ago now, right after Easter, movement started, and movement has been increasing ever since. And so we know, and that's probably the best signal. We know people are no longer staying at home. Maybe they're just going for hikes now. Maybe they're going out to pick up takeout food. But they're tired of sitting at home. They're starting to move even before they've been told they can move. That's because people want to go do things. That's because there is demand for something else. So I understand that there may be fears about the market, and reasonably so. Like we could retrace, we could revisit the bottoms. Most of the people that I talk to and most of the analysts that I read think that the bottom is in. Doesn't mean we won't revisit it, but they think that was bottom that we saw in March. And most of the really big thinkers are saying third quarter, we're going to have a horrific second quarter. Like the numbers really showed up in the very beginning of the second quarter. By the end of the second quarter, we're not going to be locked down anymore. And the recovery will have begun by the end of the second quarter, just like the collapse had begun at the end of the first quarter. So in a 3-month window, we will have gone from collapse beginning to recovery beginning. And then the third quarter and the fourth quarter, we'll end up seeing the resurgence. That doesn't mean we're going to get all back to where we were by the end of the year. Probably not. But the market's going to look ahead of where the economy is. And if the economy has good numbers coming out of it, then we're going to see a faster resurgence than we expect. There is something to note, though, and this is an interesting thing about unemployment. Those folks that I've been talking to that own their own businesses that are in the more at-risk spaces, the retail spaces, the restaurant spaces, their employees are telling them, why would I come back to work right now? One, it's a risk. Two, my unemployment is higher than my paycheck. And so that's going to be tough. That's going to be tough for folks that are not bringing back managers. They're bringing back frontline staff. And it's a risk, and they're not being compensated additionally for that risk. So you may see things start really slowly in those retail and restaurant spaces because of that, because the unemployment benefits that were granted in the CARES Act were so generous from the federal government. So we may see something slow coming out of that. We've gotten no more questions, and I'm afraid I'm tilting over into just rambling and babbling. So if someone has something they want to say, John, Scott, or David, that'd be awesome.
Yeah, I think that I put it in the chat box, but I think it wouldn't be a bad idea for us to touch on the oil price swings and what that might mean to Wall Street and Main Street. And maybe David can weigh in and start with that if he can unmute.
Well, the energy sector, probably the worst sector in the S&P 500 right now. And I think it's going to continue to have some problems until the economy starts getting up and going again, and people are using gas in their cars and other uses for energy industrially. Certainly at that point, I think that it'll rebound. And, we got to a point where they couldn't produce anymore because there was insufficient storage capacity for oil that had already, and gas that had already been produced. As a consequence, that's why the market bottomed out, and I think it'll get better. It's just a matter of time. So goodbye at the moment.
Yeah, they paid you to take delivery for a little while.
Exactly right. If you had a nice storage bin in your backyard, you'd be doing very well.
What, couldn't they just provide barrels? I mean, I would store it. I'd put it in my backyard. No, I'm kidding.
I gotta have a barrel.
I think what David just said about, it being a good buy is sort of interesting because it reminds me of what we do at the firm, which is not pick sectors and not pick individual stocks. And I think back to when barrels just a few months ago were at 60, and they were a good buy at 50, and then 40, and then 30 and 20. I mean, you could have thought they were in half or 2/3 off. That was a good buy, and then they traded below zero. And so trying to catch a falling knife and hoping you get the handle is really not been a good recipe in my career. And that's why I stopped doing this a long time ago. And that's why we have asset allocation and everything else. But just to speak to the oil thing for a second, because I think it's interesting, there is a huge positive that comes from this. And I'm speaking really selfishly for a second because I can't talk about sports anymore because there are none. So my friends and I talk about gas prices. So I actually was able to get unleaded gas in Marin for $2.25 this weekend. My tank filled up for $25.05. So I got to put like $15 in my pocket or $12 in my pocket per tank. I'm just one guy, little old guy here with my family. What about the rest of my city, state, country? What are they saving in their pockets when they're filling up over the next 3 weeks, 6 weeks, 3 months? So I think there's a huge embedded, like almost tax return being put in people's accounts when they're saving money on this. And I think there's a lot of pent up positive wind at the sails of the economy once we get going. And I think one of them is oil prices in a major, major way.
Well, and those of you who know how frugal I am, I have 2 cars, and both of them have full tanks of gas. I usually roll around in each car with about 1/4 of a tank. So
there you have it.
there you have it.
There you have it. That's John right there.
Well, in light of this too, I think it's worth mentioning and remembering that the stock market is typically the only place that people do not want to buy when it's on sale.
Right. That's right.
Yeah, and in the same vein of the oil, I want to just touch on the commodity cycle very quickly, because I know I talk about it all the time, but it bears discussion at this point. So we always have to remember that with commodities, quantity, the availability of the commodity drives down the price of the commodity. So we had all of this excess oil, no one's using it. The availability of the commodity is through the roof. The price goes through the floor. And then the reverse. So when that happens, so the price goes to the floor, production is an inverse of that. So price goes to the floor, or actually production is directly related to price. So as price goes to the floor, production gets capped. They stop pulling oil out of the ground. And if they stop pulling oil out of the ground, while the price is low, so price is low, that means demand is going to get pushed up on it. Once we can apply demand, once we're free to do that, we'll have more demand for oil and no one will be producing it. So we'll dig into the capacity and the capacity will slowly go away. And as the capacity declines, the price will rise. And as the price rises, you'll see production come back online. And that will repeat again and again and again and again, perhaps not in this extreme format, but it will repeat forever, because that's the commodity cycle. And that can be applied to the attractiveness or the usefulness of silver or nickel or copper in wires. It can be the attractiveness of glass in wires. Anything that's a commodity will follow that cycle. You get more capacity, price goes down, less production goes down. The volume of the available commodity goes down, and then we use it, and then we get too much stuff. It gets used again, prices go back up. That's the cycle. That's how it works. I think we have about 9 minutes left. We don't have any other questions right now, so I want to say thank you for everyone being here. I don't know if we'll post this one or not. Maybe we will, just to keep it consistent. But we will be here again next Monday, and maybe we'll slow up after that, but I just want to make sure everyone here knows we will be here again on Monday to answer additional questions. We may go to every other week as the need declines a little bit, and we'll always play it by ear and make changes if we need to on the fly as well. If any of you have questions that you didn't want to ask publicly, or have come up at the last second or come up tomorrow, don't hesitate to give us an email, drop us a line. You don't have to save this for Monday. We're happy to talk and continue talking as long as it takes. Thanks, everybody.